Hi there, welcome to Kneppy Invest. I've put myself on a stop clock. I am going to try to finish this video within 30 minutes. That's the sort of time limit I want to put on these videos, but sometimes I can ramble on a bit. And I was just a little bit surprised that yesterday's video was almost 1 hour instead of 30 minutes. And I'm already 20 seconds into this particular video. So in this ASX daily rundown video, I'm going to go through what has happened on the market today. Still about 40 minutes left in trading, and most of the indices are down, although small caps has had a better day than the rest of the market just based off the 5 indices on market index. Have a look at the top 5 announcements. Also have a honorable mention, and then we'll have a look at a few charts. And I've also been fairly active today. I've actually sold out of 2 of my trading positions, Judo Capital and Bravura. I took a nice 50 plus percent return with Bravura, about a 7+ return with Judo Capital. And then I have taken a small initial trading position with Annex, and I've also bought into Main Pharma, a trading position there simply because the share price took a bit of a plunge today. And that was just me taking advantage of a little bit of market weakness. Now, there's no news from the company, so maybe there will be some bad news released by the company over the next few days. Maybe there is some loose lips. So we have a look at that company's chart. We'll also have a look at charts of a few other companies as well. But first of all, let's have a look at the ASX today. And another fairly weak day on the markets. And just by looking at what's been transpiring all day, everything's been drifting lower. And I don't like that. I like when the markets drift higher, if anything. Discretionary has had an okay day, up 0.43%. And apart from healthcare, every single sector or other sector is down, including real estate, down 1%, industrials down 0.84%. And based off this, indices, small caps is up a little bit. Let's have a look to see if any other indices are up. We have, of course, discretionary, healthcare, yeah, and small caps. Let's have a look at the best performing companies and the worst performing companies. This is probably something I could probably eliminate, but I still like going through this just to see if I missed anything. And a lot of times I haven't missed anything. We have EZZ Life Sciences. In fact, that's one of the charts I'm going to show you. Up 20%. I'm not sure what's happening there. I think, in my opinion, the company has been undervalued, and maybe it's getting towards good value now, up towards a market cap of $50 million. Company that's profitable and dividend paying and also growing. Other than that, Somnomed, I'm going to have a look at Somnomed. Share price up 16%. I just want to have a look at the chart for that company. Australia Oil and Gas did release something, but on fairly low volume. So let's have a look by market cap. So we have Illumina, Neuropharmaceuticals, GUD Holdings. And Neuropharmaceuticals didn't release anything, but GUD Holdings did. They released something last night, and in fact, this company will be my top announcement of the day, up 11.57%. A little bit of surprise and market reaction there on a positive trading update. A couple of lithium companies, Sayona and Core Lithium. Ainsworth has had a bit of a bounce. I think I did show you Ainsworth chart last or yesterday's video. And a few copper companies. And I'm pretty sure copper had a really good day. And there's Avita Medical, up 9%. And that company has come in number 3 on the top announcements of the day. They released their first quarter results, and the share price of that company has been under pressure in the past month. I think it's down 44% in the past month after they released a trading update. And there's another company I own, Visan, up 13.8%. So more than likely, my portfolio is doing fairly well because of Visan and EZZ Life Cycles, or Life Sciences, not Cycles, Life Sciences. Now onto the top losers. And so anything of note here, I can't see anything. I think Macro Metals went into trading halt, if I remember correctly. Maybe this is what I should not be doing if I wanted to get into within 30 minutes. No, they haven't. That's right. This company share price went up a lot, and there's just a little bit of profit taking, that sort of thing. And there's Fleetwood. Fleetwood down 11%, and that company has coming in number 2 on the top 5 announcements of the day. So let's have a look by market cap. Main Pharma. So there he is. Main Pharma was down by more than 10% at one point. It has started to rally, and we'll have a look at the chart for that company. Pantoro did a capital raising, if I remember correctly, and a few of these companies, including AFT Pharmaceuticals, down 6.8% on $32 of shares traded. $32 can drive share price down 6.8. The company is illiquidly traded. And BetMakers chart actually looks pretty interesting. Maybe I could include BetMakers if I have a bit of time towards the end of the video. So we have about 25 minutes left. So let's have a look at the top 5 announcements of the day, and also include an honorable mention because this announcement came in late. So National Australia Bank is down. Don't know why it's come to this particular company. So let's start off with the honorable mention. Why not? A company called Whitefield Industrials, a company I've never heard of, did release their half-year results, I think. Preliminary final results, for the year ended 31st of March 2024. I have never heard of this company, although based off net tangible asset, this is a fund manager. So I actually did open up this particular announcement just to want to see what this company does. And I'll also open up their net tangible asset banking. So whenever a company releases results, I'm always going to have a look, and no matter the company. So the first thing I wanted to know, does this company do? And you find what they do. Well, you could have actually looked here, but they do have not an about section, but principal activities on the director's report. So during the year, the principal activity of the company was investing in companies and trusts listed on the ASX. Okay, fund manager. Fair enough. Something else you might see in the financial report is what sort of companies they invest in. And this is quite illuminating. And here it is. Banks. They invest in banks quite heavily. In fact, 28% of their investments are in banks. I don't like that at all. Why not just invest in an ETF? Then that way you don't have to pay fees. Otherwise, it seems like they just invest in the top maybe 100, 200. Although I did see here they've got PointsBet valued at $0 and keeps on going. And then a lot of non-bank financials, including AMP, Challenger, a few other interesting companies here, Magellan. So I would, there's no reason, in my opinion, to be investing in this company because of that. So maybe the only reason you might think about it is if they're trading under net tangible asset backing after taxes. So current share price is $5.18. Let's have a look at the most recent report. So they are trading right now, NTA before deferred tax at $5.62, after deferred tax of $5.10. I like to look at NTA after deferred tax. That's a better indication. And right now, share price is just above that level. And also the NTA monthly snapshot, they have the top 20 investments. Bank, CSL, Bank, Wesfarmers, Bank, Macquarie Group, Goodman Group, Telstra. This is just like an ETF, really. So Whitefield Industrials, you're just like an ETF. And more than likely, I'll never look at you again. Let's have a look at the chart. Actually, I did have a look at the chart before I came on. And the chart just looks like maybe a worst case or a bad version of the XGO. In fact, if you probably invested in the STW, you probably would have done better than Whitefield Industrials. This is a weekly chart going back. Actually, in fact, if we go back to 2014, it hasn't done much. And the dividends are not going up at all. I'm spending way too much time on this company for a company that made it into my honorable mentions. But if you just have a look at the dividends, there was a nice little rise back in 2017 to 2019, but otherwise flat. And dividend yield is 3.9%. You could just do way better if you invest in ETFs or in your own companies that you like. Okay, so let's go to a company that came in at number 5, a company I know nothing about. And as soon as I saw this announcement I saw the company name, Centrepoint Alliance, I went, is this a fund manager or REIT? Something like that. And it's got financials here. That's the sector it's in. And this company released a trading update. So you know me, if you do watch my videos, you know I love trading updates. If I see trading update, I'm going to open it up. And this was a positive trading update. Even though share price is flat, this was a positive trading update. In a sense that it wasn't an upgrade, but previously they had EBITDA guidance in between $8 to $9 million, and now they're expecting EBITDA to be between 8.75 and $9 million. So it's not technically an upgrade, but they are expecting EBITDA to be in the higher end of the previous trading range. Now, what does this company do? Well, let's say straight away in the first paragraph, a leading provider of advice and business services to financial advice firms throughout Australia. And it's a okay, positive announcement. So the next thing I wanted to have a look at was just the chart. Centrepoint Alliance. The other thing I like to do for these companies is just have a look at the valuation. So it has a market cap about 60 million. Oh, right on, 59.7 million. So the chart, what does the chart show me? Now, for some reason, trading view, why? I get frustrated very easy. Auto, I want it to auto. For some reason, it just checks off the auto. Okay, so this is Centrepoint Alliance's weekly chart, and the share price of this company has been going sideways for about 3 and almost a half years. So back in early 2021, share price popped up. In fact, the share price went on a beautiful run in the last half of 2020, but since then, share price going sideways. Now, it does look like maybe you could argue there is a bit of a trend in the share price in the past 7 months or so, 6 months. Looks like back in November, this would have been the AGM, 17th of November, I'm assuming. Share price rose or rallied on high volume, and the share price has increased from there. So just based off looking the last 6 months since the AGM, I'm assuming it's the AGM. Let's confirm that. 17th of March, let's go back 1 year. 17th of November. Oh no, looks like purchase of Centrepoint. So Clearview sells some shares, and that did cause the market to get excited, which is sort of weird. They had the AGM the previous week, so the 10th of November. So that's really interesting. The share price rallied on someone selling the shares. Otherwise, not that interested in this chart or this company at this point in time. So Centrepoint Alliance, I don't know much about you, and maybe there is some sort of argument that I should learn a little bit more about you, because at least you are EBITDA profitable. You may not be profitable, but at least you're EBITDA profitable. But the chart doesn't look that exciting. So that's coming in number 5. We have Centrepoint Alliance, a company I've never had a look at. Now, maybe if you know a little bit more about this company, maybe leave your opinion, what your thoughts are on this company. Coming in at number 4, we have the first of 2 negative announcements, and that is from MaxiParts. Share price down 8.5%. And again, trading update. You'll notice a similar theme in all these companies. In fact, 4 of these companies released a trading update, and one of the other companies released their results. Apart from Westfield, I forget what the company is named, WHF, Westfield something. So whenever I open up or see a trading update, not open up, just see a trading update, I'm going to open up and read it, because even if it's negative, you can find a lot of interesting stuff in it. You get some insights into why the company is not performing or why the company is really performing. And even just the language they use can be illuminating. So this is a negative trading update. We know that just because the share price is down, and they do explain why. A few things here. Activity slowdown on the East Coast. That's one reason this is a negative trading update. Pricing behavior of market competitors becoming more inconsistent. That's intriguing. So there is more competition when it comes to pricing. Just the way they have worded that is really intriguing. And then ongoing inflationary pressures combined with short-term increased costs associated with integration activities. So for these reasons alone, I think the company is not performing as well as they would have expected. So sales now expected to be around 240 million, EBITDA about 23 million, EBITDA margins about 9.5%, and net profit before tax, why not net profit after tax, but net profit before tax about 10 million, and adjusted net profit before tax of about 12 million. So is this an opportunity? Why does it do that? Is this an opportunity? I know why it does that, but I'm just saying that. Is this an opportunity to maybe think about buying some shares in MaxiParts if it's gone down to a really interesting level? But no. Share price actually in a downtrend. So this doesn't look healthy at all. Share price has actually decreased from just above $3 back in August last year, now to $1.95. Let's have a look at the weekly chart. Even then, if the share price falls below $1.80, that would be really negative. So there is an important level here. We know it's an important level. First of all, share price had trouble getting through this level back in 2020 and has not fallen through $1.80 during the past 3 years, and it's bounced off it once. So $1.80 is an important level, and the share price of MaxiParts is not that much higher than that. But at this point in time, no interest in MaxiParts. And now let's have a look at, and that company comes in number 4. Now let's have a look at Avita Medical. Coming in number 3, Avita Medical, halfway through the video, 15 minutes in. So Avita Medical up 9%, $2.78. They released their first half results. Now they did release a negative trading update on the 11th of April. There it is. Updates expected first quarter revenue. Now, I'm not really going to go into these financial reports. It's just how the market's reacted and if they've given any sort of future guidance. Now, the numbers were disappointing. So revenue only up 5.8% to 11.1 million. Now, they are expecting revenue to increase to between 14.3 and 15.3 million in the second quarter. So significant increase in revenue in the current quarter. So it remains to be seen whether they do hit that. And they do have some guidance for the full financial year, and they're expected to be in the lower end of their previously guidance range of between 78.5 and 84.5 million. Now, the company is not profitable and not cash flow positive. However, they are expected to achieve cash flow break even and GAAP profitability no later than the third quarter of 2025, so more than 1 year away. Now, they've also some interesting language here. So this is from the CEO of the company, Jim Corbett. We believe we have taken the necessary measures to invigorate our burns business and improve our commercial sales process to return to sustained growth. So the company has been under a little bit of stress, a little bit of pressure, and just based off this bit of language, there is reason to be hopeful that things will be moving in the right direction in the current quarter. But just because the CEO has said that doesn't mean it's necessarily going to happen. But saying all that, there has been a lot of negative sentiment in this company. Share price down 44% before this announcement over the past month. Let's have a look at the daily chart first. In fact, from its highs of $5.60 back in February, share price has halved. Now, there's a very important support level at about $2.30, and that goes all the way back to quite a few years ago. And does look like share price has bounced today, up 9% or so. Fairly weak volume compared to what we have seen over the past month since they released that negative trading update. I was hoping the share price could get down to about $2.30, and I would have thought maybe taking a trading position, hoping there would be a bounce. Now, I do think this company has a potential to be fairly cheap if they do significantly grow over the next 5 years, and there is a chance they do. And if I do compare this company to PolyNovo, I probably prefer Avita Medical over PolyNovo right now, sort of similar areas, just because of valuation. But again, a company is not profitable, not generating cash flow in their business. In fact, they're burning through a fair bit of cash. So that's coming in number 3, we have Avita Medical. Coming in at number 2, we have Fleetwood Mac. No, not Fleetwood Mac. Fleetwood Limited, down 11% on another negative trading update, just like MaxiParts. And again, this is just about the language. So based on current trading performance and outlook for the remainder of financial year 24, the company anticipates full-year earnings to be between 7 and 8.5 million EBIT, which is below the current analysis consensus. And the reasons behind that: challenging market conditions in RV solutions have worsened, and the building solution segment has been impacted by further delays in the awarding of tender projects, and there are lower margins as well in the New South Wales operations. Hence, the share price has dropped. This is a negative trading update. And is this a company where the share price is getting to interesting levels? I'd say no. In fact, this chart fills me with nothing except move on to the next company. Now, if the share price gets down to about $1.12, maybe I could get excited. So if you look at the weekly chart for the company, and the reason I'd get excited then is you can see the share price of this company has trading in a range for about 8 years. The top of the range is around about $2.80 to $3. The bottom of the range is between $1 and $1 and we'll say 15 cents. and it has hit the bottom of the range 3 times. Well, we'll say twice in the last 8 years. First time was during COVID-19 financial panic. The last time was in May, June of 2023. So it's about 30 cents off that level right now. Otherwise, yeah, I have no interest in this company at this point in time. And definitely not a high quality company. You can just see by that chart. Okay, so that's coming in number 2. We have Fleetwood Mac. I always think of this company as Fleetwood Mac. I'm sorry, Fleetwood, it's just your name. Coming in number 1, we have a company I have traded in the past. The share price was in a downtrend, or the chart was in a downtrend. So I thought the market was thinking there would be a negative trading update released by this company, or their results will be weaker than expected. And I think the company has fooled the market because the complete opposite has happened. Share price up 12% on a positive trading update. Company released this at 4:41 p.m. yesterday evening or yesterday afternoon. And a lot of times you might say, the cynic in you, when a company releases a trading update that late, more than likely it's going to be negative. That's my first thought. That was my first thought. So I expected this to be negative, but it wasn't negative. Now, it wasn't absolutely positive. It wasn't 12% positive, but I think, again, the market expected some bad news from the company, and it wasn't bad news. So they are pleased. It's interesting language. I have seen a company use the word pleased when they've released bad results. It's not a good look when you use the word pleased because you shouldn't be pleased. Anyway, so they are pleased to confirm that the financial year 24 underlying EBITDA is in line with expectations. It is forecast to be at least $193.5 million. So this was not a profit downgrade. It was things are going as they are expected, and the market liked it. They're expecting further revenue and EBITDA growth in financial year 25 as headwinds partially moderate and new business wins begin to contribute. So possibly the market is viewing this particular announcement on a favorable light or in a favorable light. And that's why the share price has gone up. Now, this is not a breakout, unfortunately. So the whole reason I go through this process is I look for breakouts. Now, that's the weekly chart, and just by looking at the weekly chart, you can see the share price of this company is all over the place. But, so I traded this company back in the middle or the half of last year, second half of last year. You can see the share price was trying to go on a run, but then the share price moved into this trading range. I got out because you don't want to be holding when the share price is going sideways. Share price fell below support a few weeks ago, so I think the market expected a negative trading update from this company or something bad from the company, and the company has surprised, and now the share price is just back into the trading range, up to just below $11. It's been as high as $12.50 at the peak positive sentiment in the company. That was back in January of this year and September of last year. But at this point in time, I'm not interested in this company right now just based off the chart. Now, if I see the share price maybe go sideways or start to rally from here, maybe I could become interested in taking a trading position in this company. Now, I've got 7 minutes to go. I was going to show you some tweets before we have a look at charts. For those who have paid no attention, apparently GameStop and AMC, which is the not Amcor, the entertainment, the movie theater company, both went on massive runs overnight because what's his name, the kitty guy, Roaring Kitty or something, started to tweet again or something ridiculous. That's why both of these companies went on a run, up 70% or something, because Roaring Kitty sent out a tweet. Isn't that ridiculous? When a stock surges 90% because of the return of Roaring Kitty, you know we are currently living in one of the most speculative environments in history. And to be honest with you, I can't argue that. Why would it's just ridiculous? It's stupid. It's stupid. Copper is up nearly 2% today. I actually did have a look at that. That's why some of those copper companies were on a run. So let's have a quick look at copper. Just want to see if copper's still up nicely. Yeah, copper's beautiful chart. What else do I have here? No sign of recession by Lance Roberts. In current earnings growth expectations, of course, Wall Street never predicts a downturn in earnings. So there is that. So Wall Street is positive about earnings growth, but again, they never forecast non-earnings growth. And a non-financial or investing tweet. This is from Professor Elliot Jacobson. This is a really interesting tweet because sea surface temperatures are really elevated around the world, and this could lead to significant rainfall and flooding as they've experienced in Brazil. and what we might experience in Australia. So this is something that I'm not sure we're really paying enough attention to. And because sea surface temperatures lag, they're slower to react than atmospheric temperatures. Anyway, so global sea surface temperatures yesterday were 5.44 standard deviations above the 1982 to 2011 mean. If SSTs were normally distributed, this anomaly would occur by chance about once every 100,000 years. Now, there was an interesting reply here. How many days since we last didn't set a daily record high? And the reply from Professor Elliot Jacobson, 419 days, consecutive records when it comes to sea surface temperatures. Now, we have seen elevated sea surface temperatures in Coral Sea, and I think that's one of the reasons why we have seen some really good rainfall along the east coast of Australia. And I think this is going to continue. So this is, if you love rain, maybe the future is a world for you. Okay, so a few charts I want to show you in the next 4 minutes or so. The first chart I want to show you is EZZ Life Sciences. Share price up 20% today. I do own shares in this company. I'm not sure about this run in the share price. I can understand the initial run. The company, I think, is undervalued, that sort of thing. But I'm not sure about the excitement in the company today. I'm not sure what's happening. It's 2 days running. Share price has gone from 84 cents to $1.09. Don't know what's happening. Don't know. Let's have a look at the current share price of the company. $1.06. So it's put off a little bit, but nothing too extreme. But I would say this is a company I like. I've held shares in this company now for over a year. I'm well into profits, about 60% up or so. And I'm not willing to sell my shares in this company just yet. Market cap is still, I think, below 50 million. I could be mistaken. Market cap is currently 48 million. I still think it's cheap. Still has a dividend. This company's profitable and gives the shareholders a dividend and is growing. And what else do I want to show you? Well, so we have EZZ. I was going to show you Bet. I'll do Bet really quickly. Bet makers. I just like the chart, how it's turning. I think sentiment and the trend is trying to turn positive. I do like the look of this chart. I'm not sure about the company, but I just like the look of this particular chart. And the last quarterly was interesting from Bet makers. Somnomed share price was up 15 or 20%. Is this a reason to get excited? No. Simple answer, no. I'm intrigued by the increase in volume, but maybe this company did a couple raising, but no interest in this company just based off this chart at all. No interest. Titomic, share price was up 15%, got to 10 cents today and has pulled back. 10 cents rules again. 10 cents is always going to have, the company will always have problems getting above 10 cents. If it gets above 10 cents on strength, that's always very bullish. So this company share price got to 10 cents and has pulled back. I could imagine trading this at 2. I could imagine trading Titomic just because there is a lot of positive sentiment behind this company. So nice increase in volume. The chart looks pretty spectacular. And finally, I have taken a position in Main Pharma. So let's have a look at Main Pharma. I've got 1.5 minutes to get through this. I can do it. And Main Pharma, hopefully it's gone up since I bought. Oh, this is always exciting. Oh, it's gone up. It's gone up good. I don't know what's happened here. This was a bit of it was a trade that I took a little bit of time to think about taking. Now, there was a significant sell-off on open. The company released no news that I can remember. I don't believe they released any news. No news. Did a presentation last night. So I would say the market ran on this presentation, which was not marked price sensitive. That's the reason I missed it. But there was a pretty big sell-off in the first 30 minutes. Share price went as low as $6.30. And why is that important? Because this support level for this company was just above $6.30, but in that zone was a support level. And the share price has gone on a run, a nice little run over the past few hours. Share price actually got to $6.75 at one point in time and has pulled back a little bit. And so if you just have a look at the one-day candlestick, yeah, you can see the share price has bounced off that support level. Now, share price has been going sideways for the past 2 months. And if the share price rallies above 740, that would be fairly bullish. If the share price falls below 640, that would be bearish, and that would be my sell signal. Anyway, that's all I've got That's all I've got for you today. And don't forget, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Right on 30 minutes. Thank you very much.